Good morning. Were you sleeping, Nick? It would have been a lot easier to sit through that. I tell you, if the market was open, who wouldn't have exited longs and who would ever expect it to come back like this? I mean, look at this huge bottoming tail bar here on the futures. I mean, I looked last night and, you know, saw the Dow was down about 400 points or so. And, I was like, can this thing actually turn around? It was at support, and it was, one of those things that you see this kind of reversal, and of course the news started to filter through that, no one was killed, so that news kind of did, I guess, give traders some bias of maybe, you know, following bombs weren't coming and whatever. In any event, I mean, just looking at things, if we were, as I said a few days ago, maybe whenever it was, what if we were trading from a cave, and we don't know what's going on, but we see this sell-off and we know is, that something's going on, but we're just, following our method. Hey, it's at support. It's down a lot. It's a climactic buy. Press the button. And, lo and behold, it goes back up. Now, of course, it didn't have to go up the way it did. It just, it was the same kind of a concept that we spoke about yesterday pre-market. That was that, here the markets went up back to the top of the range. And comment was, yeah, that's powerful. You got a wide range bar, pushing to the upside, but it's the weakest link. And then lo and behold, things went sideways. They chopped around. No one knew what news was going to come, of course. But then as it started to roll over, and then this is where the news started to come out, was right around here. Yeah, I think it was right around there, between 4:30 and 5:30, something like that. But then there, that was the drop, and back down it went, cut through some support, and it was the NASDAQ that actually held up better. In any event, we're back up to the top of the range, and as we look at the spiders and Qs, it's like, we're just starting the day out where we left off yesterday. Big deal, right? So I guess we'll just see how things play out, as we always do. Right? Prices are holding up here relatively well at resistance. They did here before. And so now it's a wait and see to which way they go, one way or the other. And the markets are correcting here. We got our internals telling us risk for longs on this day. They started going down, right? On the gap down day, I said, be careful of the bear trap. Of course, I didn't know news was coming out again. And then the reversal, the China news, Iran news back down again. In any event, we've got a correction that's going on. And so far, it's a sideways correction through time, and choppiness, uncertainty, tails, overlapping bars. It is what it is. We'll see how it unfolds, into next week. So far, we've got a weekly charts that are in an uptrend, new all-time highs. We'll see how this bar, the weekly bar, ends. Is it a bottoming tail bar? If it is a bottoming tail bar, that tells us, regardless of the news, the buyers are lurking down below, and that's a good sign. And ideally, what we like to see is that, this moving average might be able to catch up with prices, meaning it just goes sideways a little longer. It's a simple moving average. So what it's doing is just drops off a prior bar and it adds in the close of the current bar. And so over time, the current closes being averaged in, the moving average catches up to what the current prices are. And that will take a few weeks, which would be normal, but let's see how it goes. Right now, it's just choppy consolidation, overlapping bars and stuff, as I said. NASDAQ, you can see that showing the relative strength, even that it was yesterday, continued to show relative strength on the sell-off. Well, it broke through this little support here just marginally, It's all the way back up to the top of the range. And now it's stalled up there. Support, resistance. Look to the left. Right? Keep it simple, stupid. Right? No need for bands, trend lines, channels, Ichikumi clouds, and all that other nonsense. Just simplicity works. So now, what's the bias? Well, you can sell a bear call spread on some kind of a right additional selling here, some maybe 5-minute or 15-minute breakout failure. Right now it's still in an uptrend, but some type of weakness showing up here. I know we're talking about the NQs here versus looking at SPX, but the idea is the same. Right? The analysis is the same. So as we look at the futures, the S&Ps, and we see that this is up at resistance here, maybe a breakout failure, and then up above this level, you look for premium, maybe 3260 above that level there. And if that's there, start with that as a bear call spread expiring today. And then we'll just see. I mean, it could even be, well, we'll see where this, well, this is probably up higher here. We'll see as this chops around. If it comes down into the middle, then maybe you can put on the put side. So we'll see. YM has been the weaker, but still got this giant bottoming tail bar. So when you get big range days like this, and this obviously this day isn't over. This is a current bar. We don't know what it's going to look like, but big range days are typically followed by narrower range days. And I'm looking, Roland. Yeah, Roland, I'll check that out as soon as I'm done here. I'm going to ask me on YouTube to check out an email. So again, the analysis is the same, and why we look at these different markets, because we look for which markets are showing relative strength, which ones are showing relative weakness, and how we can compare one to the other to guide us as to the probabilities of one maybe pulling the other up or the one pulling the other down. And that gives us, our bias in trading decisions in intraday as well as for swing trades. The Russell, another big bottoming tail bar, as it dipped all the way down. Why did it stop there? Right. So this is the kind of thought process that I have gone through over the years to reinforce the method that I use. And that is to say, when I see a sell-off like this, it doesn't matter whether it's the Russell or Apple Computer or a gold stock, it doesn't matter. I think to myself, why there? Why did it reverse there? And while I've been doing this now for a few decades, the answer always comes back to look to the left for the validation of the method, simplicity, support, and resistance. That is how the markets operate. And all of this mumbo jumbo that's in all of our trading platforms that lead us down the rabbit hole is just ridiculous. But how do you avoid that? I think it's almost impossible. I didn't avoid it, of course, in any event. So that's my my soapbox that I'm give every day, pretty much, about trying to push people away from the esoteric analysis and simplicity. So gold sold off. It was up. Well, this is oil. That was up big, and gold was up huge last night, and that sold off. So now we've got a topping tail, and that just leads us with a bias that now this is going to have to consolidate, which makes a whole lot of sense. I guess if that news didn't come out, this probably would have never rallied like it did. But now we've got this topping tail, and now this is going to take time to settle down and chop around here. And we need more information. Numbers outside the expected move. All right, 3260, right, on SPX. That's up here. That's the top of the trading range. And 3205. 3205, which, okay, you know, since this doesn't update, I need to look over here as to where this was, which was down at 3217.5 down here to the unfilled gap. So the range is expanded. However, you know, look, this is at 32.3. It's basically unchanged from yesterday. So, you know, this is kind of, well, outside of normal hours. So do you bring that into the range? I don't think so. Well, I think you continue to use this 3,200 level as your reference point until proven otherwise, since this is overnight trading. So let's just, you know, let's just look at that for the moment as an anomaly. You know, I know it's there. Prices are holding up. So for today, you know, just for today, I would just use this level down here. I mean, if you can get premium down here, that would be safer, of course. But right now, you know, this is just basically in the middle of the range, which opens up the possibility for considering a condor, you know. So if prices started to sell off here, my assumption would be this is the level of support where buyers are going to step up again. And why shouldn't they? Right? This is where they stepped up before. And that's why I utilize the day chart as well as the 24-hour chart. And the ideal scenario is for the two to be in agreement. My experience historically is when the two are out of sync with each other, things tend to be a bit more choppy. So I would just continue to use 3,200 and the 3,260 up there. Yeah, whatever Trump's going to say, that is an unknown. But you know, this I don't know. I think it's a tough decision for him. If he was going to do something, he probably, I guess, would have done it already. You know, they go and shoot off these missiles. Who knows? What did they actually blow up? I didn't listen to all of the news that's news, so I don't even know what they blew up with those 15 missiles. No one was killed. So who knows? Maybe it was an orchestrated, okay, guys, we just let you blow up something over there so things can be okay, you know, and we can move on to something else and let the public, you know, just chew on this for a while. Who knows what goes on behind the scenes, you know? So maybe they said, hey, you know, let's work this out. Tell all the soldiers to get out of the base. Let them blow up some barrack over there or whatever. And, you know, we'll see what happens. All right, let's keep going here. Qs, trading range, where are they at here? All right, 215-ish and a half, right there. Pretty much unchanged. So let's forget about the news. We're in the cave. Prices are up here. What if they break out and fail and right back down again? Short bias. We're up at the top of the range. Let's see how far down it goes. Right? If it hangs up here for a half hour, you know, Trump talks, that's done. Well, you know, maybe the coast is all clear. So our factory work is one and where we say, okay, here's a wide range bar. Let's just spitball, so to speak, the halfway point of that wide range bar, give or take, right? It doesn't have to be an exact, you know, just say, okay, there's the halfway point. And our method factory work says, okay, my bias is as long as the candle bodies of the new bars will stay in the upper half and ideally in the upper third, I'm bullish based on that wide range bar. And we'll see. So tails historically can dip below that, but as long as these candle bodies stay up here, and if they can do that for a few days, that's positive, even in the face of the internals having reached that extreme. But you know, as we reviewed yesterday, they're more neutral at this point, and that doesn't mean we're out of the woods, but it just means that so far the markets are just correcting sideways versus going down through price. So again, we're gathering information just by the structure of the prices that we're seeing. tells us that there's uncertainty. And from this time frame point of view, the message is to stand aside until these ranges begin to contract and we have information to guide us better. Right? Russell pulling back here. We know that it's still got room to get to the top of its range. Pretty normal kind of a pullback. Things are kind of whippy over here on the daily time frame and on the hourly. So right, there's the dip overnight, and here's where it is now. You know, same story. Transports had a decent day yesterday. I think we looked at CSX. Right, it was looking pretty good. So there, you know, it's getting better. Right, there's all these overlapping bars, the gap reversal, so on and so forth. This consolidation on the weekly, right? The transports is the last holdout, so to speak, to show some strength. So we're looking for that, ideally from the bullish point of view, for them to bring up the rear. And if we can get these rails on the move, well, then the transports will, right, in part, start to come out of this range. And, you know, if transports can get through 200 here, I suspect we're going to see markets moving up. And that could still all be within a sideways corrective price action. And anything else? Oh, we looked at oil, that whippy price action. It's at the top of the range. We talked about this on Monday when this wide range bar had pushed up here. And or Tuesday, whenever I talked about this, I said it's top of the range. You got to be stupid to be thinking long at this point after it's gone from the bottom of the range to the top of the range. Let it do whatever it's going to do at the top of the range and then see if it can break out. Right? So far, breakout failure. Bonds, big whipsaw, right? Like everything else. Back down here again. Same story. Big range expansion. Who knows? You know, let things settle down. It's going to take time. We already looked at gold, silver, same story, you know, into this choppy consolidation. So at this point, the markets need to settle down, and we'll take a look at individual stocks, see what they're doing. They kind of, as you can see down here, they're kind of like all over the place here, but some things that were down pretty big last night are now unchanged. Some things are, you know, up a bit, down a bit, and we'll see how it all shakes out by the end of the day. All yours, Dan.
All right, thank you. Good morning. Yeah, Greg and I spoke last night after the market tanked. I'm like, oh man. And we were talking like, do we need to tweak anything for our subscribers? Like, or is it just common sense? Hey, you know, we're in the middle of this Iran thing. We know there's a chance of it, but we're chart traders, and last Friday's gap down, and then Monday's, you know, all signs of bullishness. And then yesterday we closed with a 1, 2, 3 in the upper half. So we're still bullish. All right, so Greg reviewed all that. All of our opens are fine, with the exception of Boeing gapping down here. And at first I'm like, oh, well, how is this related? You know, the market snapped back. Why is Boeing down? And then I saw in the paper that there was a 737-800. Yeah, it crashed right after takeoff in Iran. And then I was thinking, was that a coincidence too? Who knows? But yeah, that's sad. Everyone on board died. It's horrible. So Boeing, you know, I think after this trade, we're gonna, I don't know, we might want to just stay away from him for a while. But we're short the 327s, which are over $3 under today's Wednesday, under Monday's low. So hopefully we'll be okay. We're at 50% of max profit yesterday in one day. All right, let's go to gappers, and then within the first 30 minutes, I'll go through all opens as I usually do. EH, I just saw this one coming by the ticker. So, you know, $1 on a 1350 is a big gap. And the recent IPO trades too spotty for me, light volume. CEI, little oil stock yesterday. Look at, you know, it took out Friday's high. And then you had a nice 15-minute breakout. And I can tell by these dots here that this thing has just gotten crushed. Look at this, $8 million. They've had a lot of reverse splits. So it's junk like this is what, when we had the end of year, you know, bottom fishing for crushed garbage can stocks, this is a candidate. Look at this volume, something happened right there. Then it consolidated for 3 weeks. Yesterday was your entry. Yesterday was the entry over, over last week's high. GM, I read in the paper that yesterday they reported that they had the slowest sales in China and that 2020 is going to be tough, but, you know, pick up in volume on support. If it can hold here and churn up, I'm sure volatility has expanded on this sell-off. Could be a Friday put spread candidate. GLD, we'll, you know, keep an eye on this to do some call spreads. Macy's dog. Remember before Christmas, I think right on this bar. No, it's actually a 1227 over the high of 1226. We sold an out of the money put spread, and I sent an update. Let me give it to you all. No, actually I didn't. Well, I said yesterday. Well, here's what I did yesterday. We have the 1614, and it looked good yesterday. So I said, you know what? Let's try to squeeze more out of this one. I said, bid a penny. But we'll see where we're at on that put spread. And beyond, we have a nice gap up. Remember this? So this was, you know, we'll talk about this in today's MT Live. And it was yesterday morning we had the discussion. Well, because today's topic is what are the tells, TELLS, you know, events to know that the pattern's ready to go. And when I saw these 3 bars yesterday morning, I said, aha, this is our something. And then look at this little 180 reversal, breakdown failure, off to the races. So that, yeah, yesterday we nailed the entry on that thing. Nice job. Cisco got a downgrade, but no pattern. 810, I think had, I don't know if there's earnings or news or something, but I like this consolidation with a price void. It's a small stock. I can't tell really where it's gapping though. We'll come back to it. Let's say this is an interesting one. Big gap up percentage wise, ripped, topping tail. This is a buy setup. This green bar, it didn't trigger, but when I see patterns like this, I want much more of a potent reversal. Again, what we'll be talking about at noon. I want a something, like I want a bearish gap down that then closed up, because when you have this much air below, this reversal has a high odds of failing. Compare that to PIDCO. So this one, same thing, came in, it's still bearish, 100% retracement of that bullish gap. But these tails, this tail and this tail, in this engulfing bar, those 3 bars are the tell. And that's when we entered. We entered this long on Monday. Yesterday, relative strength with the market gapping down, this gapped up. It's a beautiful 15-minute chart. So That was a good little comparison there. MSM, it is a buy setup, but from a square top. So retracements like this from a square top, as opposed to just having one bar up there, in a deep retracement, they still might be tradable because of the price void, but I have zero expectations of the first retracement back up clearing through that resistance because that's a square top. But gapping down a little bit. So if it can still trade over yesterday's high with this gap down today, then that looks good for a swing. I'm looking at Alex's comment. Oh, really? Yeah, it was Ukraine airline. Oh, and I was telling Greg, I was watching this Gon, however you pronounce his name, the Renault CEO that Japan arrested, threw him in the jail for 6 months. Wow, I told Greg that Japan just has been doing a number on this guy. He speaks very credibly. I feel bad for what he's been through. Now, I'm sure everyone has two sides of a story, but this is not making Japan look good, in my opinion. And on an unrelated subject, cues here, looks like they're breaking down into the open. I read that Bloomberg has already spent up like $132 million on political ads, and that both Bloomberg and Trump plan on buying 60-second ads at the at the Super Bowl for 10 million bucks each. All right, here's a buy setup. And somebody asked me yesterday about this one, and I said exactly this. I said it is a buy setup, but it's a sloppy one. See how it came down in gaps? So it's stabilized here at the rising 20, but I said it's more just of a day trade for me. And you see it did break out in the 15 into the close. I don't know why it's gapping down now. I don't care, but it looks like it wants to come maybe to the low 32s and get deeper into the support. What should be the exit price? Ganga on this, LK? Oh no, because it's 450, never mind. So what stock are you talking about? Tesla. You bought it depends how tight you want to be, but it's up 1, 2, 3, 4, 5 bars and gapping up. So the answer is it depends on your trading plan, how tight you want to be. But with the market weakening here, pre-market, this relative strength, I personally would keep a very tight leash on it. So for starters, this is me personally. Don't get mad if it, stops and goes back up. I'm just telling you it's extended and the market's weak. I would be inclined this closing little 15-minute pivot and then keeping a close eye on it, maybe even bailing half under these pre-market lows. So that's my answer. I mean, it's still a very bullish weekly and monthly. Depends how much of a pullback you want to sit in. Big gap up here, 3180, but it's sloppy. Win got a downgrade, no pattern. Unfee, no pattern. Shown got a downgrade or earnings, I forget which. Oh, yeah, it was earnings. All right, so this trade's so sloppy, but bearish gap. That's steel. X is doing nothing. You're gone. GPX, no pattern. You're gone. Zynga, McGraw sent that to me. McGraw, it was slop. But yeah, yesterday had a beautiful breakout. So that ideally, McGraw, this would be a 1, 2, 3 for tomorrow. But market's coming in here. Yeah, selling's picking up here. But again, relative to the daily, this small little sell-off is nothing. It's nothing. It's an inside day of the top 80% of this bar. So let's just wait here. There's nothing going on. Glancing at the opens, we have, yeah, I'll look at, and now the market's perking here. It's only 1 minute, so yeah, we have GDXJ in our ETF trader, and we legged into a covered call. Looking at opens, Waste Management is fine. Morgan Stanley is at least green. AURN, see Beyond's coming in. Yeah, see, I don't like, it gave up that entire gap. I said move stop 30-minute low. The midpoint now is 11 cents. I'm going to keep a tight leash on that, just because he's a tough one to trade. That's maybe 5-minute low. I got him on my other computer. RPD we're in, GE we're in, SDC we got in, and that's another